Hey everybody, welcome back to Actual Investing. Today is another installment of my Series 5 on the 5th. Now, if you're new to the channel, you may not have heard of this. This is a series where once a month on the 5th, I talk about 5 stocks that I find compelling. This is not meant to be a recommendation to buy these stocks. It's simply my thoughts so that you can start your research process and come to your own conclusions. So let's just dive right into it. So 4 of these 5 stocks are stocks that I've bought in the previous month. So I am putting my money where my mouth is on 4 of these. And the 5th stock is a stock that I have not purchased yet, but I'm still researching and likely will open a position in. So I'm serious about this one. In previous 5 on the 5ths, I talk about stocks that I like but haven't purchased. These are things that I'm actually buying. So let's start with ServiceNow. The ticker is NOW. ServiceNow, I just recently purchased. The same day that Salesforce reported their earnings, ServiceNow was down 12% in sympathy, even though Salesforce's earnings really had very little to do with ServiceNow. The only thing is they're both enterprise software companies. ServiceNow is a software giant, and I think they're trading at a very reasonable valuation. Essentially what they do is they help companies automate workflows, and they specialized in IT service management. That's where they got their name. That's where they got their start. I do believe that they might be a potential beneficiary of AI. They have this Now Assist generative AI plugin that they use, so it could be a gimmick or it could be a way that they're using generative AI to bring real value to organizations. I'm more inclined to lean towards the latter given how big ServiceNow is and how much data they do have access to. Going to my spreadsheet, if you're new to the channel, I have this spreadsheet where I rate on 4 factors for growth stocks. They are gross margins, annualized revenue, price to sales, which is a valuation metric, and quarterly revenue growth. So out of those 4 factors, I gave each company a score. The possible you can get is 20. My average is around 12. So ServiceNow scores really, really well with a score of 14. There's not too many stocks on my spreadsheet with a score higher than that. What's helping ServiceNow out is that they are huge. They do have annualized revenue of $10 billion. Their gross margins are around 80%, and they're growing at 24% year over year with a price to annualized sales of only 14. And for comparison, there are companies that are growing slower than ServiceNow, like Palantir, that have a higher valuation. So for me, a company that's larger and growing more quickly, it would make sense if it had a higher valuation. So I do think that there's quite a bit of upside from here, even though they are already a software behemoth. So ServiceNow I like. I just did my first dollar cost average position the day that they were down 12%. I think I'm already up, which is really nice. So let's move on to the next stock. Next stock that I did buy recently is Lululemon, ticker LULU. So Lululemon is definitely not a disruptive technology by any means. However, it is a company that I think presents a buying opportunity. So Lululemon is a globally recognized brand. They have 30% of their sales internationally, and they are a household name trading near 52-week lows. So one of the things I would caution against is looking at a stock that's at 52-week lows and just assuming that it's cheap, because a lot of times stocks get to those 52-week lows for a reason. I think for Lululemon, it's the weakening American consumer. So even though they do have 30% international sales, Lululemon still gets most of their business from the US. And the US has just been plagued by high interest rates, high inflation, and a very, very weak consumer. So I think that's also the reason why Starbucks is seeing a slowdown in foot traffic. People are taking things that are quote unquote luxuries and just removing them from their budgets. They just simply cannot afford to go out and get their Starbucks latte every day. They simply can't afford to buy, $60 leggings. However, what we need to do is look forward into the future. So Lululemon is still growing quite strongly despite this slowdown in the American economy. Their profit margins are now improving, and I think their valuation feels very cheap for a company that's growing at double digits. And as soon as the economy starts to improve, companies like Lululemon are going to see a reacceleration of growth because everybody who's been cutting back on their spending, once they start to have a little bit more wiggle room in their budget, they're going to buy these luxuries like these Lululemon products, like their Starbucks lattes. So I'm quite bullish on the consumer discretionary sector as a general rule right now, just because I think everything is beaten down and you really should be greedy when others are fearful. And that's what I'm doing with Lululemon stocks. So I do own Lululemon, and one thing to note is that their earnings are tonight. So I definitely wouldn't go all in right before earnings. You never know what can happen. Any kind of bad news could send the stock down. However, it could also send the stock up. So if you're interested in Lululemon, I wouldn't buy a full position today right before earnings. I think that's a little bit risky. What I would do is dollar cost average. So buy a little bit before earnings and then buy your rest after earnings. Next stock that I want to talk about today is Snowflake. Now, a few of you have asked me to talk about it. One guy commented saying that I lost all my credibility because I mentioned Snowflake on my video and he thinks I'm a bag holder or something. Anyway, I don't know. Sure, maybe I'm a bag holder. I think I'm down like 10% on Snowflake, but I'm still really interested in the company. I did buy more recently. Snowflake has a lot going for it, and they're trading at historically low valuation. So if you know anything about Snowflake, you know that they have always been one of the most expensive stocks on the market. From their IPO, they traded at a price to sales in the hundreds. Like, their valuation has just always been absurd. So now what we're seeing is their valuation actually kind of makes sense. They're trading at a price to annualized sales of 13.6, and they're growing still at 30% year over year. So for me, I'm okay with paying that premium for a company that's still growing. Now, what you're missing with Snowflake is that profitability, and it's the same issue that MongoDB saw with their most recent earnings. Snowflake and MongoDB are both just spending so much in order to grow, and with MongoDB, it's not really paying off. With Snowflake, it is still paying off, but it is slowing. So this is probably the most high-risk stock. However, I'm comfortable paying this premium that I'm paying right now, even with the profitability concerns. I think as Snowflake continues to grow, they're going to be able to milk those strong gross margins of almost 80% and turn those into net profits. I have no doubt in my mind that they'll be able to do that. Right now, they're focused on growth mode, and I'm okay with that. So what Snowflake does, they're a data warehousing company, and that may not make a lot of sense. It didn't to me, but essentially Snowflake helps aggregate business data in a sort of data cloud that you can share with other members of the business. So at my old firm where I used to work as a financial advisor, we actually started using Snowflake solutions for our client data. It's not necessarily a CRM platform, but rather other types of client data. So I don't think they directly compete with a company like Salesforce. They are sort of in their own niche. The other exciting thing about Snowflake is that they've been doing a bit of acquisitions, and typically I'm a bit critical of companies that grow by acquisition because I prefer organic revenue growth. However, I think Snowflake's recent acquisitions are actually really good and really complementary to their main business. So they acquired a company called Samuha. I hope I pronounced that right. It's a data sharing company. And then this one, Neva, is an AI search platform. So think, if you're familiar with the company Elastic, it's like a competitor to Elastic, which is a data search tool. So as Snowflake goes out and acquires these bolt-on acquisitions, I think they make a really compelling case for everything data in one place. They have the data cloud, data sharing, and now data search. And I think that's going to be really, really useful to medium-sized businesses like the company I used to work for. We were really happy with Snowflake. All right, so let's move on. Shopify is the next stock, and I did talk about Shopify last month, so this is kind of cheating, but I just want to emphasize I bought more Shopify. I'm still quite bullish on Shopify. Nothing has really changed. The stock is still quite beaten down. Shopify, I think, is a play on the gig economy, and even if you're not terribly bullish on e-commerce, I think it's quite apparent that there's this trend of people having side hustles. So you think of most content creators on YouTube, pretty much all of their merch is sold on Shopify. I mean, there are other platforms, but Shopify is the leader by far. And I think as time goes on, there's going to be more and more of this shift to the gig economy where people sort of start these side hustles that they can do alongside their job and maybe even instead of their job at some point. And I think it's just going to be a shift in how my generation, especially the Gen Z millennials, goes about work. I think a lot of my generation are trying to break free of the corporate, quote unquote, rat race in order to do their own thing. And I think Shopify helps to empower that. So the nice thing is that they really have still seen impressive growth, even with, like I talked about with Lululemon, a weak American consumer. So Shopify is still growing at 26% year over year, and their price to annualized sales is just around 10, which honestly, for a company that's growing that rapidly, it makes a lot of sense. Shopify's profitability is nothing special. I mean, they are not currently profitable right now. They've had some profitable quarters. I have no doubts that when they're ready to shift to consistent profitability, that they will be able to. So for me, Shopify is a kind of a no-brainer buy. It's one of my larger positions now that I've been adding on the dips. And finally, this is the stock that I don't yet own, but I would like to at a reasonable valuation. So this company is called Interactive Brokers, and the ticker's IBKR. So Interactive Brokers is a custodian. So my entire audience is retail investors. So maybe a lot of you use Interactive Brokers. They're kind of a competitor to like a Schwab or a Vanguard or a Robinhood or a Webull, something like that. However, what's cool about Interactive Brokers is they're actually the largest electronic trading platform in the US, and they are very international friendly. So they help foreigners and expats invest in global equities. Even if you're in the US and you want to, like I talk about Nintendo on my channel, I just own the ADR, but if you wanted to own own actual Nintendo shares on the Tokyo Exchange, you could open an Interactive Brokers account, deposit dollars onto the platform, convert those dollars to yen, and purchase actual Nintendo shares on the Tokyo Exchange with yen. So it's just a really cool platform that I think is really helping to bring together the global investable universe. And the nice thing that I talked in my Finding Good Stocks video about how I like to invest in blend. So there's this idea of value and growth, and then there's a third category called blend, where you put both of them together and you have a little bit of growth with a little bit of profitability. That's what Interactive Brokers is. So they do pay a small dividend. I think their dividend yield is like just under 1% right now. However, they're still growing at double digits at 14%. They have a PE of 21, which is kind of low for a company that's growing this rapidly. They have these strong gross margins of 88%, and they're decently profitable. Price to annualized sales is 11, which is a bit steep, so that's why I'm saying I would like to own them at some point, but their stock has just been on a tear. And the thing that sucks is I actually discovered this stock probably a year ago when the valuation was much lower, and I for whatever reason, I didn't buy, and I'm really kicking myself. But, these things happen. I'm not going to FOMO in. I'm going to wait for the valuation to become a little bit more reasonable. Maybe if they see a price to annualized sales of something like 8.5 or 9, I might start to slowly move into accumulating a position. So that is my 5 on the 5th today. I tried to keep it short. Again, these videos are meant to be kind of a rapid fire. Here's the 5 stocks. Here's a little bit about why I like them. Go out and do your own research, and if you like them too, add them to your watch list. Do what you will. But again, would like to emphasize, it's not advice from me. I'm not telling you that you should buy these stocks, just what I'm doing personally with my portfolio. So if you liked this video, please feel free to give it a like. If you disliked this video, I say this a lot, but honestly, dislike it. Tell me what I can do better. Tell me what you'd rather see, because I am trying to improve. The cool thing is I just got approved for, what do they call it? Like the partner program on YouTube. So I'm going to try to start offering memberships. So if you want to support the channel, maybe I'll make it like, I don't know, $1 or $2 each month. And so if you want to support me, that would be an awesome way to do that. Look for that maybe in the future if I don't have it out by now. That's something that I'd like to do. And then hopefully I can start taking control of the AdSense, because YouTube has been playing ads on my videos and I don't get paid for it. So I'd like to either just take off the ads so you guys don't have to see them, or at least get paid if they are going to put ads on. So anyway, so that's a new development of the channel. And all I can say is thank you guys for subscribing. Thank you for watching the videos, because that has been just really huge. And I love doing this. This is my hobby. So I just want to say thank you to everybody who does watch these videos and does leave positive comments. I've started to see some recurring people, some familiar faces. So it's just really cool, and I really enjoy doing this. So thank you guys for all the support, and I hope you have an awesome day.